Hello and welcome everyone to the Commodity Report for the 24th of May 2023, presented by myself, Phil Carr, at the Gold and Silver Club. Right now we have gold prices, they're trading all the way back down towards $1,950 per ounce. We've seen over 1,000 point decline now in 2 weeks since the CPI data. Everything that we talked you through to expect this decline in precious metal prices for the typical narrative of sell in May and go away, the dollar index here slingshotting and breaking out to 2-month highs. So as you know, we've been shorting the metals and also capitalizing on the long side on the dollar, as well as building into multiple positions on the long side on natural gas and also crude oil as well, both of which we scaled out of more profits over the course of this week. So at the start of the week, we banked over 500 points on natural gas. We've also now banked over 1,500 points since Friday on crude oil. So in total, over 2,000 points banked since Friday of last week. So of course, for every one lot contract that you'll be trading, that's $20,000 of profit. Every 10 lot contract you'll be trading, that's $200,000 of profit. So many straightforward opportunities for you to capitalize on right now in the whole commodity complex. As we've talked you through, there have been opportunities to buy oil on the dips here, as we've seen it trade back down towards the swing lows. And now just within a matter of a couple of days, we've seen oil prices, they're broken out over 3.5% to the upside. They're back trading back towards the swing highs, back towards 2.5-week highs at the moment. Now, natural gas prices, we saw 11% breakout last week on Thursday, 14% breakout for the week. That, of course, enabled us to scale out of more profits. We built into multiple natural gas positions over the course of April through to May. All of those trades well in profit, and we've continued to bank into strength. Now, alongside that, we've taken the opportunity on sell-offs that we've seen at the start of this week on copper, breaking back towards 6-month lows to start to build out a position. I mentioned it previously that normally copper performs very well as you go into the end of May and start of June, whereas many of the other metals, they can continue to be under pressure. This has been the case with platinum, gold and silver throughout the month of May, especially from the CPI data onwards over the last week and a half. This is where we've really seen the metals accelerate to the downside. There's been back-to-back opportunities to capitalize on that. We, of course, continue to be selling into platinum as well. We stay long the dollar here, which has performed very well. And now all of our oil trades, they're moving really nicely as well alongside our natural gas position. And as I mentioned, we're starting to test the water here and build into a trade here with copper too. So as we continue throughout this week, major news items to be aware of are: one, the minutes of the FOMC statement. That's going to be on Wednesday at 7 o'clock London time, and also Wednesday's oil inventories data. So these are going to have a big impact, of course, on commodities. More specifically, the inventories will, of course, affect oil prices. The minutes of the FOMC, they will have a bigger impact on the metals and also the US dollar. Then, of course, as we transition into next week, we have a public holiday on Monday. This is where the LBMA is closed, so you're not going to get a London fix in the morning or the afternoon on the metals. This is often where you can see surges to the upside on the metals during dinner liquidity and when the LBMA is closed. I would absolutely look at copper for that as well at the beginning of next week on Monday. Then we're, of course, transitioning to the end of the month, and then we're going to be moving into a new month, so new capital inflows into June. We've got non-farm payrolls, and then, of course, we have quad witchings. There's going to be back-to-back opportunities alongside the FOMC statement, hotly anticipated Federal Reserve interest rate hike in the middle of June. So there's going to be no shortage of massive opportunities for you to capitalize on the current macro-driven environment that we are in right now. Of course, this comes down to utilizing data, statistics, market intelligence. Definitely ditch those outdated technical analysis strategies and gimmicky technical indicators. If you're not making money in the markets right now, at the moment, you absolutely should be, and you just need to optimize and change your approach. Again, you want to be utilizing and learning the real-time data-driven cycles for each commodity. So learning the daily, weekly, monthly, quarterly, real-time data-driven cycle. Alongside that, you want to further compound your knowledge and understanding of the intermarket correlations, the ratios in the market, the key areas of liquidity that are targeted to allow you to enter with precision, snipering in at the lows, and of course, banking your profit at the right points in the cycle as well, capitalizing on the windfall amount of profit that are provided regularly with the cycles that we see on commodities. Further align that as well with the macroeconomics, the fundamentals, the narratives in the market, of course, also the fear and greed in the market. Further compound that too with how the hedge funds, money managers, the banks and institutions, how they are positioned in the market. This is all going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.